Hello traders, Gary Wagner here. It is 12:50 in Honolulu, 6:50 in New York on Monday, 28th day of April 2025, and this is the evening report for gold and silver. Gold prices continue to demonstrate robust technical support above $3,300 per ounce, with traders remaining responsive to developments in the United States-China trade relations. The market is characterized by strategic bargain hunting and cautious sentiment as participants anticipate the release of several significant economic reports later this week. Traders, gold gained $24.60 in New York trading, taking the most active June gold contract to $3,354.80. Overseas in Australia, gold has declined $9.10 from New York settlement price, taking a troy ounce to $3,345.70. However, on closer inspection, when we look at the dollar index today, we can see the dollar index declined by 0.69%. Considering that gold gained 0.74%, the vast majority were directly attributable to dollar weakness. The dollar index is currently fixed at 98.68. On today's show, I want to look at the most recent rally and compare it to the two other major rallies that we saw starting at the end of 2023 into 2024, the middle of 2024, and this most recent rally. In essence, what I am doing is plotting the price advance as well as the amount of time taken for a full motive phase, waves 1 through 5, for an Elliott wave count here, here, and here. I'm also making the assumption that the all-time record high was most likely the conclusion of a fifth wave, meaning that we could be entering a consolidation period or a straight-out ABC type correction. The one thing that we will notice is in terms of dollar gains, this first rally had a gain of $557, the middle rally $474, and this most current rally, gold has moved up $836, almost a doubling of what we saw during the rally that occurred mid-2024. The first thing I want to look at is the actual angle of the trend, with this first rally that began in 2023 having an angle of 26.67%, the middle rally having an angle of 20.01%, and the current rally, much steeper, having a ascent angle of 31.43. Much greater dollar advance. Roughly the same time period when we look at the days, 126 days, 133 days, this one a little bit longer, 231 days. I have changed the chart from displaying in standard candlestick to a simple line chart so we can really pay attention to the most recent move that started at the beginning of this month when gold went parabolic from $2,970 to the most recent high above $3,500 per ounce. If we put the most recent activity into perspective and tie in events that occurred on April 2nd, Trump announced that that day would be Liberation Day when he announced a minimum of a 10% tariff on all U.S. imports would be effective on the 5th of April. The markets reacted by selling off brutally. Gold came down as a byproduct of U.S. equities having a steep price drop, which was in fact a continuation of the sell-off that really began towards the end of February, beginning of March. And when we overlay a gold chart to the Standard & Poor's 500, we can see that towards the end of January, there was a clear break in market sentiment for U.S. equities, with that marking the beginning in which we would see the Standard & Poor's 500, along with the other major composites, trade steady till the middle of February and then begin to lose a tremendous amount of value very quickly. Lastly, traders, I want to look at a larger period of time, going back to 2023, to show this dynamic split in market sentiment, because up until then, for the most part, in a loose way, both gold and U.S. equities were moving higher, gaining value, until the split that occurred at the beginning of February. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.